Hello guys, hope you are doing okay. So, hope I am not late. It's like 2 minutes after 10, and I know that some people they come little later, so I will be always waiting. So, for this time, as usual, we try to answer your questions. We speak about the market. We speak what's going on into the whole market. So we'll be waiting for the guys to come, and then we can directly begin. And hope your trading and either day trading or swing trading will be good for the last couple of weeks. Let's see. So there is one watching. So I don't know who is this. Well, this one. But we try just to have few minutes, and then when people come, we begin to speak about stock market. So as you have seen in these 2 weeks, I will explain later with the chart how good was the market is, and we hope that things will continue like that. Let's see. Let's see people here. We have only one, so I don't know what's today, so we have 4 minutes. Hello, Ugandan Knuckles. Fine, I am very fine. How are you? Thank you for coming. So I will be just guys, I will be just waiting for more guys. At least when I explain, it will be for a lot of people. So and as usual, you can ask any questions, and then when we begin, I can answer all the questions together. So so hope things will be better right now. Let's drink some coffee. Okay. So let's it's 10:06. Let's begin, guys, and with whatever guys are here. So Ugandan Knuckles has asked the question: if you buy stock and hold it overnight, then that stock considered as a tax purpose a capital gain? Oh no! Listen, I have no idea about, since you are from Canada. They told me they use some kind of some kinds of accounts that they don't pay tax at all. So I don't know if you since you are in Canada, you should know about this. Okay, I don't know what is this called. This this account is called, but they told me they will not pay tax. Now, capital gain, you do it whenever you have a trade. Okay, for example, you have a trade, either the day trade or it is swing trade, when you leave the stock for 1 day or 2 days or 3 days or 4 nights. So this has nothing to do with it's all capital gain. It means you should pay tax, but at the end of the year they will see your account. Here in America it works I think the same as everywhere. So they should see if you have made money, the whole account, not just one trade or 2 or 5 or so. If you have made money, they will have this as capital gain, and it is added to your income. Okay, this is how it works in America here. So for example, you make some money from your job, and then you have an account. Here I'm speaking about just a general individual account, okay, not specific account, just a general account, which is called here individual account. So at the end of the year you will see if you have made money or you lost money. Now the good thing here is that even if you lose money, this money that you lost till $3,000, it will be not counted. Since you lose money, it will be cut off from your income. Let's say for example, you have $40,000 a year. Okay, just an example. Now you lost $3,000. This is the maximum, they don't add more. $3,000, and your income is $40,000. So when they do the tax, they take $3,000 from 40,000, it will be 37. Now you pay only tax on this $37 okay, on your income, and you don't pay tax on 40, but you pay on 37. But let's say you make $3,000, just an example. If you make $3,000, this $3,000 is added to your 40, so you have made $43,000. So they make tax on that. So this is how it works here. And there are, for example, there are a lot of kind of accounts. For example, here we have, for example, Roth Ira. It is an account where you hello Artkov, how are you? Where you have no relation with tax. Either you make money or you lose money. You don't claim the loss, and you don't claim anything. And even if you have made money, the government or the IRS will not touch your profit. It will stay until you are at retirement. So some people, they like this, so they do it. So Ugandan Knuckle said, so day trading also considered as capital gain, but I heard sometime day trading income is not capital gain. It's like normal business income or loss. No, here, listen. Here maybe we are not on the same page with this capital gain. And listen, capital gain is when you make money, when you make money from stocks. This is capital gain. Okay, capital, we mean the money, and it is an income that it is added to the tax. But listen, I have no idea about about Canada and how do they proceed with this. But it is not. It's not a big deal. It's not a big deal. If you made money, you will expect more tax. If you don't make money, you expect less. And when you do it once, or you ask your CPA, it means your accountant who do tax for you, or you only ask him once and he will explain to you the situation and how it works, because maybe it's different like here in America and there. Okay, so this is about the tax. And there are some people here in America, if you want to do, if you are really into for example, if you are really into trading and you have money, if you have more than $25,000, you can make a business account. It means you will be considered as a business, as a day trader. This is what they accept. Okay, not swing trader or investor. Day trader. It means you are doing daily some trades. Now, in order to make trades, you should have at least $25,000. Okay, so I will Ugandan Knuckles. I will give you just some information, but I don't know if Canada have the same tax rules as USA. So it's not. So I will just go ahead and just give you some information. At least you can ask your CPA if this applies on Canada also. Okay, so let's go check. So I will try to make it easy for you guys. Okay, to give you 3 kind of accounts in USA, and try to see if these accounts are the same as in Canada. Now, here the first one that it is known is called individual account. Anyone, just you go to your broker and you open an account for you. This individual account, it's one account, but you can open partnership. It means many people. You can open an account like that. But here I'm speaking about one person. Individual, and we have Roth IRA. This is another account, and we have day trader as business. Day trader as a business. Okay, so this status is you are a day trader. It means you do trade a lot. Now, what is the difference between these 3? Individual, okay? So let's say you make $5,000 in a year when you do the tax. Now, this $5,000, which is your profits, it is added to your income, which is your job. Your job, W2, it means your job, what you did in the year, it's called W2. And for example, you make 40K plus 5K, so you have 45K to be taxed on. There are some deductions, but here I'm speaking about in general. Here you pay tax on $45,000. Now let's say you lose 5K. Now when you lose 5K, so your 40,000 minus 5, so you are expected to be taxed only on 35,000 in tax. So here, when I'm speaking here, guys, I'm just in general, okay? I am not a tax preparer, and I am not a CPA to give you more information, but this is just general information that I know. Now, if you use Roth IRA account, this is another account and it is specific. Okay, so what will happen? Let's say you make 5K. Now this 5K in the year, it has no tax. No tax at all. There is no tax. So your Roth IRA has nothing to do with tax. Now, if you lose 5K, okay, also there is no tax. It means you can't claim. So this is the most important thing you should know about this. No claims. It means you cannot ask the IRS to take $5,000 from your $40,000. So here you make $40,000 and you taxed on that. So your business, your Roth IRA here, because this is retirement, is considered as retirement. So the IRS don't look at what you did. Either you make money or you lose money. So this is for retirement. It means your account stays until, I think, 59 and 6 months. And at that time, you can take the profit, you can take the principal. This is called Roth IRA. So understand that. So you see that there is a big difference. Now, what does it mean when you have a day trader status business? This is another account. So you should ask your CPA how to do it and how to do it this one. So here, let's say you make $5,000, okay? You can, this is your profit. It should be added after the business expenses, after the expenses, like expenses, for example, commissions, or you go to seminars. Okay, it's like a business. Anything that you do in order to help you to day trade, all these expenses should be taken from the account, from as expenses. Let's say all expenses is $3,000. Now, what is left is only $2,000 that should be added to your income, like the same, like here, like here, the same as here. But this $2,000 is added to your income because the business has nothing to do with your job. Okay, business is business and income is income. But you should pay tax for this $2,000 because this $3,000 are expenses. It means it should be written off from your. It means you have not, as if you have not made $5,000. You have made only $2,000 because these are expenses. Now, what if you lose $5,000? Now, whatever you lose, okay, with plus the expenses, let's say expenses is $3,000, so it will be $8,000. It should be minus from your income. Let's say your income is 40,000 minus 8, you will only pay tax only on 32,000. You see how good is the day trader business compared to this individual. So for those who have money, who are interested to be a day trader, you should do a day trader business because it has a good thing about tax. Because understand that in America here, they help more business than they help people. Here you only claim. Here you only claim only if you want to. If you lost a lot of money, you only you can only claim $3,000 each year. The other, so here you are not going to pay tax on 35, but only 3,000. So you pay tax on $37,000 because I have mistaken with this one. So here is what you claim is limited. This is the law, okay? This is the IRS. Limited 3,000 from your income. But here you can claim any money that you have about your business. Whatever is the money, 5,000, 10,000, 20,000, 100,000, whatever you lose, you can claim, and it can help you not pay tax, maybe if it is so big. Okay, so this is America, but Canada, I have no idea. So you should ask your what we call your CPA. It means your tax accountant, to give you more explanation. Okay. So Ugandan knuckles. This is the information for you, but it's always very easy. But just ask your CPA, someone who is doing your tax, or he is professional. He can give you all the thing, and you can give him my explanation I give. Maybe he has accounts for you. If you want to make an account, you should know beforehand before you apply, because each account has some limits. It has some, for example, Roth IRA. You can put only $5,500 a year. So it's not, if you have $25,000, it will not be accepted. You will only pay, except when you are more than 50 years, you can pay $6,500. So thank you very much, Ugandan Knuckles, for this. So Artkov, thank you very much for coming, and hope you have more questions. At least we can move on to explain what's going on to the market. I don't know why today all the people are not here. Is there something happening today? There is a movie, or there is something else? Because I was surprised. All my guys, they are not here today, so I have no idea. I have no idea why is that. So if you have Artkov, if you have an idea why the people are not here, just let me know. So let's we have 23 minutes in this live chat. So as we have seen, the market has been so good. I have put some videos on YouTube these 2 or 3 weeks, and it is doing so good. You can remark, or you can notice, that most of the stocks, they have been moving up in these 2 or 3 weeks. So we will never know if this will continue, but we are officially again to the correction era. If things continue until we go out of it, 2019 will be a bull year. So we are just waiting for this to happen, but we are always try to trade. So for those people who are trading, you do day trading, or you do swing trading, or you do options, whatever you do, you should always continue what you are doing, but you should limit your trading. If you are swing trader or investor, you should limit, because as you can see, the market is not stable yet until we get out of this thing. So to explain this, so let's go to the chart. Let's see the chart, and I will just give you some information from last time. Okay, now you look here for the Dow Jones. Now, I put this line last time, and I say if the Dow Jones, okay, crosses the correction line. This is the correction line here, as you can see, from last year, which is 9 of February. This is the low of 9 February last year, and you can see that the stock market has crossed and it's going up. Now, what is the deal here? I like when the trend is leaning low. It's not up like this one. Okay, up, it's not good. When it's leaning, it's very good. So we are above the resistance line, above the support line, and now we are officially in the correction again. Okay, now if things continue to go good, we will be continuing. Most the stocks are doing so good. Now, if this crosses again and goes below, it means we will be going to the bear market. This is the bear market here, as you can see, between this line and this low of last year, because this happened in 26th of December. This is the low of 2018. Okay, so for me, I'm not looking at this one from this line. I'm not looking to this line here now. I'm looking from this line to this line. If things go good, okay, the market can continue to be good. Now, S&P 500 is doing the same, as you can see, is doing the same, and Russell has come. I told you that Russell is so fast, faster than Dow Jones and S&P 500, because the stocks are smaller, so they can be moved easily. And you can see here that we have a bull market before for the Russell 2000 from, let's say, from end of May to the high here, for example, to August 31st. Okay, so you can see that it was very, very good in a bull market, but when the Russell 2000 crosses the line, it goes down so quick. I have done a swing trade here in this one, and I exit here. But in the morning, I was always looking at the morning what did happen until I exit in this one. Okay, so I didn't exit here because it's going down, so I thought it can continue going down. No one knows. But when we have this, it's the dead end of this trend. As you can see, this trend and this trend is different. So this is end, and this is another trend. Now let's go again to see other things. Ugandan Knuckles say, hello Karim, USA dollar fluctuation affects US futures. If USA dollar goes up, then USA futures also go up. No, I don't think, listen, I don't think that USA dollar has something to do with USA futures, because USA futures have a lot of assets. USA futures, you can have the indexes, you can have commodities, you have minerals. As you can see, these weeks, the oil was too bad, and as you might see, it affects the thing. But understand that it is just trading, and you should not link one thing with another. Because there is nothing that it is a sure thing. If you, for example, if you want to trade futures, understand that it is leveraged. It means if you buy a contract with $3,000 or $2,000, in few days, if you are with the trend, you can make 50,000, you can make 100,000 or more by contract. So the only thing you do is you are in a real trend. That's it. That's why the people go to futures when they are excellent in day trading. They go to futures and to forex. Now, why do they go? It's just because these things are leveraged. Leveraged, it means with the small money you can make a lot of money if you are good. But if you are not good, you buy, let's say you buy a future contract, whatever it is, mini or something like that. If you are not a good day trader, this can be wiped out in few minutes or few hours. You will lose it all. So the people who go to I'm telling you again, if you are going to go to futures, you should be a good day trader in stocks, and then you can go, because you should it's the same thing. The only thing that it is different, the difference only in stocks, options, or options, it is another thing, or forex. Like forex and futures, the most important thing to understand is how the stocks move, how much you can make a day, how much you can be down if you leave your contract, like this. So people who are good at day trading, they can make a lot of money, and they become like a really, as I told you, day trader professionals. You could be a day trader professional, and you are doing only futures. Okay, and in futures, you understand there is no this 25,000 problem with the day trade pattern. There is no. So you trade in the night, in the day, in the morning, whatever you trade. So there is no problem with that. Okay, but these relations between I always say, for example, last week and the other week, I told you that if the interest rate in bonds is so good, a lot of people, they sell their stocks and they go to bonds, because last year there is a loss, not a big loss, there is a loss for investors. So they say to themselves, okay, if we have bought bonds at 7% or 5%, we will be up. Why you should be down 5% or 10% in the stock market, where you can be 7% or 6% in bonds? But this is just an attempt to explain things, but the market will not do what you say. What the market does is what you see in the price. For us, we should not explain with reason anything with reason, because the stock market is illogical. You should not use the reason. The only reason you use is math. It means you see the price, and you make a conclusion, you make an opinion, and then you do. For example, 4 or 5 weeks ago, all the stocks have been going down. So either you short the index or you short stocks. This is what you should do, because the whole thing, the mood of the market is like that. Okay? Now, when it stops, things go up. It's the same thing. You should do the opposite. You should go long. This is how the people work in swing trading. Now, if you are a day trader, each day is different. One day is very up, one day is medium. You make no money at all with one stock or two or the index. And then another day you short a stock and you make a lot of money. So all depends on the days. Okay? And do not try to link things like USA dollar, futures, options, and you begin to to see a lot of things. This will never help you. Will never help you in your trading. What helps you is just yes, news. You can know news if it is bad or good, but it's not a guarantee that you can make money because of that. Because the thing is, the people who trade, you follow the powerful people. It means if the powerful people are shorting the market, you should short with them because you see that on the price. You should not be against them, okay? Because you will be crushed as a day trader or swing trader, okay? Thank you very much, Ugandan Knuckles. Now we have another question from Artkov. He says, thank you very much, Ugandan Knuckles. Artkov says, hello Kareem, could you talk about what happens when the option expires? Can you still make profit if the option expires and you reach your strike price without exiting a sell and letting it expire? Oh, okay. This is a question about options. Now, so to understand this, an option, when it expires, it doesn't exist anymore. It expires. It means it's like you have a ticket to go to a festival, or to there is a concert, or there is a singer, or even there is food. When it is expired, it means it is no more existing. So for you, and this I have explained in the golden subscription and the silver subscription. I have explained nearly everything. So you should not leave an option until it expires, even if you have, because listen, I showed many examples and explanation. How are you trading options? How are you trading options? You should trade options, okay? You trade options according to the stock. If the stock goes up and your options, I don't know which strike you bought, out of the money or in the money or at the money, okay? So it depends. But if you are in the same trend, you see your option making money. Now, if the stock is going down and you buy a call, you will see that your call will become, you have no money in it, and it decreases the price, and you begin to lose money. So when you begin to lose money, you should see always the stock. You should make a plan where to exit. Okay? This is the most important thing. Where to exit? Because it's not just you buy an option, a call or a put without looking at the stock. This is nonsense. That's why when you want to do a call or a put, you should see the stock. Okay? Let's say a stock has, you see that the stock, this company is losing money, or it has bad news, and you see the stock has been going down. So you buy a put option and you follow the downtrend. So you should always see the chart. For me, for example, when I want to buy a call or a put, I should use my strategies on buying long or buying shorting. Where should I buy? Okay? And I see the time expiration or the expiration date I should take care of it. It means when am I here for 1 month or 2 months or 6 months? Okay? But understand, if the trend is your friend, it means you are with the trend. You can make money from the option. Okay? But if the trend is against you, each day you will see that you are losing more money, because until you lose all your value, and then what is left is only the expiration date time. So I will Artkov, since you are interested in this, I will just go ahead and explain more and more, and hope you will understand this thing. Okay, so let's go again, and I will explain, so be with me. Now listen, as an example. So we have a stock that's going up like this, and it was going down, and then let's say you decide, okay, you decide to buy here. Here is where you buy. Now, when this is the chart, okay? This is the chart. The stock is, for example, $25, and you bought it here, $25. Now, let's say this stock goes to $45 in 3 months. Just an example, okay? Now, let's say this is the last month, and this is the, let's say you bought expiration date on the 2nd month. It means you have 60 days. Now your option, your call goes up until 60 days. But if you, this is the expiration date. If you stay after, your call does not exist. There is no this call. It doesn't exist anymore. So this day, if you see that 60 days and the stock is going up, you can do what? You can sell this at any time here before the 60 days. You can sell, and if you think that this stock is going, you can buy 2 months more. But another strike, and another duration. Okay? But this, it's over. You should sell it with a profit. You should sell it with profits. Let's say you bought it with $1.50. Now it is $5. Okay? $5. 10, for example. You bought it with $1.50. Now it is $5.10. So you should sell it in order to have your profits. Now, if you stay more, this call will not be there anymore. So if you go to your account, all your profit that you have made here will be lost. So when you sell, you take your profits. When you don't sell, you stay in the expiration, and it's over. So you should understand this. And always, you don't have to stay too much. It means you stay whenever you see good money, you can exit. Okay? Now I will show you another thing. Now let's say the stock was here. It goes up. Let's say you bought the stock here. This is where you buy. And you buy a call because you think that the stock is going up. Now, let's think that the trend has gone down like this. And you want to stay 2 months. An example, okay? This is your 2 months. From here, you bought. This is 2 months. Now, understand, that when you buy, it depends on which strike and which is it out of the money, at the money, or in the money. Okay? Now, let's say you bought out of the money. It means the stock here is $25 and your strike, okay, your strike is $26. This is the strike that you choose. So it is out of the money. Out of the money, it means that you are buying only the time to stay, 2 months time to stay. You are not, because this option has no value. Okay, no value. It means you are just buying the time, 2 months. Let's say 2 months is 15 cents. The contract, 15 cents, okay, is the time. Now, if the stock is going down, what does it mean? Since you don't have no value of this 15 cents will go to 14, 12, 10, 8, 2, 3, until here, and it becomes 1 cent, and then the next day 0. Okay? Because you are just buying the time. And you ask yourself, whenever you buy something, you should put stop loss in the stock itself, in the chart. For example, you buy here, you say, if it goes below my price that I bought is $25, okay, this is the real price. You bought it here. You don't look at the strike price. Look where you bought $25 as your buy price from the stock. And you say, let's say here 23, if it goes, the stock goes 23, I will exit here. So when you buy at 0.15 here, it goes up a little bit, you make some money, but it goes down, it reached 23, let's say it reached 0.12. So you should sell it as 0.12 and don't stay until the expiration date, because when you stay, your time is going out until you have 0 in everything. So hope you get this idea. Hello, James Armstrong. Thank you very much for coming. So thank you very much, Artko, for this for your question. So let's go to another question with James Armstrong. Thank you, Rahmatullah Moody. Thank you very much. So James Armstrong said, do you always set a stop loss when you swing trade? Should you set it for the price you bought it in at? Now, listen, I always use a stop loss even if it is not a physical stop loss. What does it mean? It means I make the plan first and then I should exit whatever happens with my stop loss, because you should always see how much you risk in each trade. The problem you do, if you don't do that, James, what will happen to you? Okay, let's give you just an example. Okay, so let's just give you an example, and this happens always. It happens. Now, let's say a stock was going down, and then it's going up. You buy here. This is where you buy. Whatever price is, you just buy. Now, this price you bought, let's say it is $25. Now, a few days it goes up. Now it is 27. Okay? So when you are 27, before it goes, this is the plan that you make is here. This is your plan. The plan, for example, is 23.50. So you are risking $150 if you bought 100 shares. 100 shares, just an example. So you should know your plan before you trade. This is your plan. Now, if after a few days your stock is here, is 27, this is now. So you should not leave your stop loss. You can put it anywhere you like. And this is what I teach in training level 7. If you have it, you should understand. This is how to change the stop loss and how to deal with the trend. And when you should exit for sure. Okay? I have made some videos live on stocks that I follow, for example, for 5 months, 2 weeks. 5 months, 2 weeks before, last year, not this year. And I show how I follow the stock 5 months, 2 months. And when each week, I will tell you when I exit if the stock is doing bad. Now, after 5 months, 2 weeks, when I exit, the stock has been going down forever. So these techniques that I use just show you how to deal with stop loss, either to make profits, when to take profits, or when to exit when you have a bad trade. But understand, always you should make a plan. The first plan, and then you make other plans. Each time the stock goes up or it goes down, you should change your plan with a stop loss. Either with you take profit or you exit. And I hope this explanation will explain yes. So hello, let's see the other guys. Artkov, thank you very much for listening. Rahmatullah, hello Rahmatullah, how are you? How are you, Free Trader? Why you come late, Free Trader? I was expecting you from the first at 10 o'clock because I have been with a few guys, 45 minutes with 3 guys. I don't know what had happened today. Shirley Lewis, hi everybody, thank you very much for coming. I can recognize your name. James Armstrong said, okay, so you must adjust your plan accordingly. Thanks, I will check out your website and I'm getting ready to do some trading. Yes, it's very good. But listen, James Armstrong, I will give you, this is not a suggestion or opinion. It's better to do the golden subscription because you will have 13 training levels for free. Or if you are just interested in some training, you can just order them, and I'm still having 80% for you guys as a discount. It's still there. Okay, so let's I will give you the website, and let's see here. And you can send me an email if this thing is okay. So this is my email, this is my website for you guys. I understand most of you guys have the thing, but for those who are new, okay. So James Armstrong, the golden subscription gives you 13 training for free. It means whenever you get the subscription, you begin to train yourself from training level 1 to training level 13. You will see everything about swing trading, day trading, and stop loss, and how to follow the stock, a lot of stuff. Okay, or you can just order, you just go order what you like, that's it. So as I told you, it's most of the people who are beginners, they don't like to make a plan, and this is a weakness in discipline, because he thinks, oh, I want to make money, so why I am thinking about to lose? This is stupid, because in probabilities, you should never think that you can make all your trades successful. There are some trades that they will be bad. Now, instead of letting the stock letting the stock go down as it is, and you don't take an action, because the market will not stop because of you. Okay, so I will just explain this idea, because this idea is very important for the guys who want to trade for true and to make a career in trading. You should understand this idea, because not just stop loss, there are a lot of ways to do it to minimize risk. Training, for example, 11, training level 8 is about how to minimize risk and maximizing profit, because there are things you can do, a lot of things that makes you have less risk and more profits. Now, if you don't know these techniques, you will never know. Okay, so if you don't make a plan, this is what will happen to you. So I will just give you an example of 2 traders, just an example. Okay, 2 traders with the same thing. Now, so let's give 2 traders here. Now, trader 1 and trader 2. Okay, now they bought, let's say, the same stock, and the stock, for example, as I told you before, the stock was going up. He bought it here, and another stock, it's the same stock, but they bought in the same. So this is the line where they bought. Okay, the stock goes just 1 day or 2 good, and then it collapses. Okay, and then it collapses. It's the same thing. Now, trader level 1 is a beginner. He doesn't know, he has no idea about risk, so he bought it at $25, the same as this guy, $25. Now, the second one is, he has experience, okay, in trading. So he said, okay, $24 here. I am stop loss. I am out. So how much you lose here? You lose $100 if you bought, for example, 100 shares from this stock. Now, the trader number 1, he bought the same $25, but he has no idea about risk. No idea. He thinks that he buys, no idea about risk. So the more the stock goes to 23, he doesn't care. Although he saw that he lost already $200, but he stay hoping, and sometimes the stock goes up here to $23.50, he thought that the stock is coming back and he will gain his money. Okay? And then the stock continued to go down. Now it is 20. He lost $500. And then the thing continue. Now it is 15. Now it is 15, let's say after 1 month. Okay? 1 month. It reached 15, and then when he see that he lost $1,000 from his money, okay, he lost it, 1,000. So he sell here because he has pain. This is psychological pain when he see that he lost too much. Now, from the beginning, what is his strategy? Strategy is hope. He hoped that things will go good because he's, I don't know why he hoped for the market, but he thinks that the market can come back because they told him that sometimes the stock can come back. But not all the stocks can come back. His stock doesn't come back. Now, let's say this second trader, he make this trade, he lost $100. Now, how much money left from? He has $24,900. So it means that he still have his $2,490. This is his money. Okay? So the thing is, he only lose $100. Okay? So from that thing, what he should do, he has, for example, another stock, and he uses his money. This is his buy, and he use maybe, let's say he uses the same for $24 as, okay, as his price to exit stop loss. Okay, and the stock is going up, but it didn't go down the second trade, and it's going up, and it goes to $30. Okay, so from this, let's say $25, now he is making $500 as profit. So here, excuse me for this. I just make to adjust the price. Okay, so he made $500. Now his stop loss, he changed it until he exit at to make $30, and he just exit with profit. So since he lost only $100, so he is making $400. So you see the difference between these two guys. One, almost all the beginners are the same. They have the same concept about trading, about swing trading, or about investing. It's just hope. You buy, hold, and hope that the market will be with you. But understand that the market is doing what it is doing. If the people are shorting this stock, they will not stop. Okay, sometimes this stock will be too bad. So this guy has lost $1,000 in 1 month, and this guy is making $400 in the month. It could be more, it could be less, depending on how many trades he has done. So you see the difference? The difference is so obvious. This guy is disciplined. This guy, he is not disciplined. And almost how you wipe out your account is by doing this thing on the left side. Okay, so as I told you, either you do swing trading or you do day trading. You should be careful on how to trade. There are techniques, there are principles that you should apply, and you should be always ready to exit when the market is not in your way. But what if the stock market or the stock that you are buying is in your way? The trend is good. You stay until you make enough money to exit. Okay. So, as I told you before, the market, as I have explained at the beginning of this session, is so good. In these 2 or 3 weeks, it's good. We are in what we call the correction era, and if the market continues to go strong for more weeks, maybe we can be in a bull market. This is just not to be positive or to be thinking that the market will be good, but we will follow the price. We don't follow what the people say, because you will never know. You will never know what will happen. So just focus on the price and follow always the price, and be ready either to buy or be ready to exit the trade. This is the most important thing I can tell you in this live session. So today, I don't know where are the guys. All my guys today, they don't come. So I don't know if there is something happening today. There is a game or there is something like that, because this is not usual for the live session. But it's okay. We will be speaking about stocks, about questions, and about the market. And when it is done, we just stop this live session and we resume it, if God wills, next week. So you guys, if you have more questions, please ask, because today the guys who are asking too much, they are not here. So so I don't know what did happen today. So as I told you, check all the ETFs, indexes, industries, what is it called, sectors. I always show them in my golden and silver subscriptions, because they are very, very important, because you should see what is going on, what is going on in the whole market, because the whole market, it changes always. It doesn't stay in one stage. So we have another question about James Armstrong. What do you think on CGC? I think I have seen this stock before. I think I have seen this before. Oh, this is, yeah. Yes, because I see, I tell you, I have seen it. Yes, when I have been doing canopy growth, it's about marijuana, I guess. Oh, okay. So, as you can see, I have an ETF that I have put before, marijuana ETFs. Let's say 2, and this one. It seems that almost all the stocks in this Canadian Uh, yes, this is in USA. Advisor shares Vice ETF ACT, which is a new ETF for some big companies, drug companies, that they use marijuana in their drugs. Okay, and this one is ETF in Canada, and you see that it is going so good these 2 weeks. But does it go and continue, or does it stop and go down? This is what we are going to see, because it is manipulated, this kind of thing. If they advertise a lot like this here, they advertise, people they buy, and then if they stop, people begin to sell or to sell short. So be careful of this kind of ETFs and stocks, and they are doing the same. So if as you can see, CGC, let's put it here. Okay, as you can see, it's doing the same. It's doing the same, if you can see. See? Let's say here. Understand that this advisor shares is from USA. Okay? It's from USA. It has a very, very long downtrend. But if you see Canadian and this company, it could be Canadian because it has the same chart. So it's the same thing. Okay? And the ETF is general. It has all the 28 companies in Canada, and it has a lot of companies. Okay? So it's not like the other one. The other one, this one, is in USA, because USA, it is not like in Canada, because in Canada, marijuana is legal right now in all Canada. I am sure that it is all in Canada, but here in USA, still we have problems because a lot of states did not legalize marijuana and cannabis and the other stuff. Okay, that's why here, this is USA. That's why in USA it's a downtrend. Now it's going up, but it is not as good as the other Canadian, because we have a lot of volatility in Canadian, depending on the advertisement. It means the ads. Okay, so hope you get an idea about this. So you get at 29 this week. Yes, at 29 it means you bought it on Thursday. It means you bought it on Thursday. It's okay. Shirley Lewis said Netflix 380. You think? Now a lot of people they always let's see Netflix. So Netflix. Let's see the chart. So you said Netflix at 380. as you can see, Netflix is a very strong stock. It can go up as much, it can go down. As you can see here, 415, it goes to 231. Okay, so it's nearly 50%, and now it's going up again. So these kind of stocks, you know, they are very volatile, up and down. So be careful. Be careful. You say it will go to like 380. Now, you know, like Netflix, it can go higher and higher. It can go down and down. So, and it can go so fast. You see, 253 to 337 in just few days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It means 2 weeks and a half. 2 weeks and a half. It's like $80. It means if you bought it in this day, you will be making $8,000 in these 3 weeks. Understand that Netflix is very strong, so be careful, because when it goes down, it's the same as it goes up. And there are some people who like these big stocks, and they invest for the long run. Okay, it's very long. See here, the stock was only 140. So let's say at the beginning of the year, yes, it was 265. Now it's 337. So the people have made money here if they still continue to hold this stock. So try to be careful, James Armstrong. As I told you, when you make a trade, you try always to think where to exit the trade. Now, James Armstrong said, yes, always concerned about manipulation with these new companies jumping on the marijuana party train. So, but yes, listen, it could be there is a bubble for some stocks, okay? Especially IPOs, new companies. This is, if things go well, they can make a lot. But ETFs also, they can make if there is a mood of the market for these guys. It means there is a lot of advertisements, and people, they want very quick money. They want something that all the people are interested in order that all the people, it's like Bitcoin, it's like the other stuff, all the people, they come to buy. But sometimes you make it with the trend, and sometimes you lose. So it's according to your opinion, and it's very good to have an opinion or to follow certain kind of industries and to understand what makes them up or down. Okay, understand that Canada is not like USA. USA, we have still there are a lot of states that they don't legalize marijuana, so it is still in the first stages. Okay, and there are some hemp, for example, which is a kind of cannabis, but it is still not appreciated because it doesn't make people high, so it's used in industries and so. But if this will become good in the future, all the people will change their investment. They sell this marijuana and they go to the other. But marijuana is the big business, And in USA, if it is legalized, in almost all the states, it will be a very, 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 it's like Bitcoin. It will be very, very big. And each year there are some states, I don't know how many states they legalize it, but still, if they continue to legalize it, some companies will make a lot of money. But understand here, in America, companies that are big, they are not specialized, but they can add marijuana to their products as big companies. Yes. So you should, if you are interested in this, you should follow all the new IPOs and follow them. If there is one that it is flying, you can make a lot of money if there is a trend in it, because you should see what the people say, because all this is like bubbles. It means it follows what the people say. It follows the media. The media influence the people. And how do they think? Because they say, oh, this company is good, it will be big, all the people they buy without reading, without knowing what's going on into this one. Okay? And Shirley Louise, there are some stocks like Netflix, like Amazon, Google, Facebook, Twitter. These are very, very known stocks, and a lot of people they get manipulated, and they buy, they sell, and some stocks they do very, very well when they go up. Okay, and you can make a lot of money from them. But be careful when there is like a earning news or something. Be careful, because sometimes it will be not good in that time, as what happened to Google, to Facebook and Twitter last year. Okay, so please, I'm just try to be waiting for a little bit. If we have more questions about the market. So I will be, because today we don't have enough people to ask more questions, which is very good. We are at 1 hour, 22 minutes, which is very good. So I will be just waiting few minutes. So please, guys, if you have more questions, because and then we can answer them. We can answer them. And if there is no, we should just stop this live session, and we do another one next week, because I need more people to react and to ask more questions in order to explain more and more as what we have here. So the whole market, as I told you before, these 2 or 3 weeks, it's so strong. We will never know if it continues. We are now officially in what we call the correction era. Hope in the following weeks, if the stock market continues to be strong, maybe we enter to the bull market. Maybe. Now, if this continues, now I don't want to give you, for example, a prediction, because for me, I don't believe in predictions, because I don't know. Things will change at any time. Like we have been looking, we were in the bear market, and all the stocks go down, everything is down, and then we have this small trend that it is forming right now, and everything is okay. So it depends. It depends, and things will change according to the price when it changes. Okay? But officially, we are in the correction phase. It means the correction of last year, at the end of January, beginning of February, and we are there. If there is a big buys from mutual funds, the stock market will continue to go up and up and up until we get rid of this what we call correction thing of last year, and maybe we enter to a new year. If we enter to a good year, like a bull market, you will see that most of the stocks that you see before down, they will be making a new trends. You go check for the stocks. Now for me, in the golden subscription and silver subscription, I give them updates about the market, about sectors, about industries, and about stocks, and we try to come to a conclusion what to buy and what not to buy, and how to deal with this. And this is the very good thing about the subscriptions, because it just shows where things are and to show you stocks that may be of interest, and if people buy, which will be very good. Okay, so guys, it's 1 hour 26. Thank you very much for coming, and hope we do next week another session that it is better than today. And if you have more questions, please ask. What is your thoughts? Nazdananucci, how are you? Today you speak something. That's very good. What's your thoughts on NSTG? So here is the chart. Yes, you see this almost all. If you see, for example, the market, it means the stock market. You can see that these 2 weeks or 3 weeks, it's all every good for almost all the stocks. Okay, it's not just NSTG or others, because I see this stock was very good since March 27. You see, from March it goes up, it goes in March it was $6. Okay, so you see the big trend. Maybe you see what is now, but if you can see the long, very long, and this is why Nazdananucci, people who believe and who buy at first when things are not seen, because whenever you go up, the trend will be seen. So the people, there is catastrophes like this here, shorting like here, shorting here, shorting here, shorting here. It means, and it will be very volatile. Okay, but when it was going up, no one knows about it. Let's say from 6.93 it goes to 14. So here, if you can see 27 March, so it's just April. So April until June, April, May, 2 months and 1 week or 2 months, 1 week, 2. This has been more than doubling the money, because from 6 it goes to 14. So you see all this small trend, but it is excellent trend. And understand that this kind of drugs sector and biotechnology are the most powerful stocks, either up or down. When they go up, they make good. When they go down, they make good also. Now, when you say it moves on its own, what do you mean? It means there are buyers. When the buyers come, the stock will go up, and it has a small volume. That's why it goes it goes so good. And almost drugs sector, they are very, very, very powerful. And you find other kind of stocks are IPOs. Some IPOs, they go so good because the people are waiting for a company to go to get listed, and especially when the people, they like it too much, so there is a lot of play, and some stocks can go up and up so good. So thank you very much, guys, for this session. We have 1 hour 30 minutes, which is very good, which is very, very small. Most of the time we do 2 hours, most of the time, but today it's okay because we have a few people and we have done 1 hour 3 minutes, which is very, very good. So thank you very much, guys, and hope to see you next Friday at 10 o'clock if things go well. Thank you very much, and see you next time.